Investment products play a vital role in democratizing digital currency, diversifying portfolios, fostering institutional adoption, ensuring regulatory compliance, and contributing to market liquidity, thereby supporting the maturation of Web3 ecosystem. In the contemporary financial landscape, digital currency investment products are pivotal. They break down barriers, offering inclusive access to the world of blockchains and cryptocurrencies, and ensuring their potential and benefits reach a broader audience, transcending exclusivity. For investors seeking portfolio diversification, these products provide a chance to engage with a unique and non-correlated asset class, including Bitcoin and a diversified digital asset portfolio, access a risk mitigation strategy amid uncertainties in traditional financial markets. Tailored for institutional investors, these products contribute to broader digital currency adoption, enhancing market legitimacy, and accelerating the overall flourishing of the crypto ecosystem. Many adhere to regulatory frameworks, offering a compliant and secure avenue crucial for building trust among cautious investors in the evolving cryptocurrency market. These products also boost liquidity and trading volume, attracting a broader range of investors through regulated investment vehicles, thereby enhancing overall market stability. Additionally, the availability and success of these investment products signal the maturation of the cryptocurrency market, contributing to the ongoing evolution of financial markets. Incorporating digital currency assets, GBTC is a digital financial instrument designed to offer individuals interested in cryptocurrencies exposure to the Bitcoin market, eliminating the need for direct acquisition of the underlying asset. It says it's criminal Bitcoin when can people be best taking us. And beyond that, if you would make it much Bitcoin more from the next, look at the combat deal. Maybe the Bitcoin deal of starting investment vehicle. Launched in September 2013 as a private, open-ended trust for accredited investors, it represents a diversified collection of pooled investor money with the capability to issue an unlimited number of shares. The GBTC obtained Financial Industry Regulatory Authority approval in 2015 to trade publicly, allowing investors to buy and sell shares under the ticker symbol GBTC. The trust passively invests solely in BTC, offering investors exposure to BTC as a security without the complexities of directly buying, storing, and securing Bitcoin. GBTC shares are designed to track the BTC market price with lower fees and expenses. Initially accessible only as a private placement, GBTC started trading publicly on the over-the-counter market OTCQX in 2015, following the alternative reporting standard for companies not obligated to register, in most cases with the United States Securities and Exchange Commission. Modeled on popular commodity investment products like the Spader Gold Trust, which is a physically backed gold exchange traded fund, GBTC expanded its offerings to include trusts for Ether, Litecoin, and other cryptocurrencies. The approval of spot Bitcoin ETFs by the SEC marked a crucial milestone, boosting the legitimacy of the crypto industry and enhancing mainstream acceptance of Bitcoin. An ETF is an investment product representing a wrapper for a single asset or a basket of assets like stocks or bonds. Traded on stock exchanges, ETFs offer investors, assuming the prices run inconvenient way, to access diversified portfolios without buying individual securities. They provide liquidity, flexibility, and transparency, with prices changing throughout the trading day. A spot Bitcoin ETF such as GBTCI eliminates the necessity for investors seeking Bitcoin exposure to identify a crypto exchange, create a wallet, link a bank account, and manage the storage of their Bitcoin. Instead, investors can invest in the ETF through their existing brokerage account with GBTC. In 2017, Grayscale aimed to transition GBTC into an ETF for increased accessibility to retail investors, despite repeated rejections by the SEC, citing concerns about market manipulation and investor. The regulatory landscape changed in January 2024. The SEC approved Grayscale's application for a spot Bitcoin ETF along with 10 others, leading to GBTC being listed in the NYSE ARCA as an ETF on January 11th, 2024. And as of the beginning of January 2024, GBTC constituted around 3% of the total Bitcoin supply. Since its conversion to an ETF, GBTC has seen significant redemptions totaling over $5 billion of its assets under management as of January 31st. However, GBTC outflows have declined toward the end of January, and the fund still holds around $22 billion in AUM, surpassing all other competitors, including BlackRock, which has $2 billion at AUM. And the value of GBTC's portfolio is declining due to significant outflows and a decrease in the price of Bitcoin despite robust demand for rival Bitcoin ETFs. On top of that, the estate of failed crypto exchange FTX and hedge fund Alameda Research reportedly sold over 2/3 of its GBTC shares by January 22nd, 2024. In contrast, competing Bitcoin ETFs by BlackRock and Fidelity have experienced growth. Unlike GBTC, these ETFs have been attracting daily net inflows. Some attribute GBTC's asset decline to its 1.5% annual management fee, which remains higher than those of competing offerings. GBTC functions as an ETF, enabling institutional investment in the primary market and providing regulated access to Bitcoin for retail investors in the secondary market, where share prices maybe fluctuate based on demand dynamics. Now, if in the before gaining approval for a spot Bitcoin ETF, GBTC initially operated exclusively in OTC markets. Subsequent regulatory battles led to the SEC approving Grayscale's application to transform the trust into an ETF. As an ETF, GBTC shares are tradable on both primary and secondary markets, with primary market access limited to specific institutional investors. And authorized partners seeking to invest in GBTC can do so by Grayscale acquiring Bitcoin on the primary crypto market and issuing an equivalent number of GBTC shares in return for capital. And these shares can then be sold on the stock market to retail investors. So GBTC charges an annual management fee of 1.5%, encompassing all expenses associated with administering and safeguarding the underlying Bitcoin. There are no additional fees applicable. Operating by tracking the price of Bitcoin through the XBX index, GBTC's performance is benchmarked against this index. While the trust holds a substantial amount of actual BTC, the price of GBTC shares is intended to mirror the value of Bitcoin held per share. However, GBTC shares have often been traded at a significant premium or discount to the underlying Bitcoin's actual value, known as its net asset value. Various factors, including supply-demand dynamics, investor sentiment, and market conditions, can influence this discrepancy between the share price and the NAV. GBTC provides accessible exposure to Bitcoin, but faces criticism for trading premiums, high asset management fees, and potential deviations from the underlying asset's value. And GBTC offers a streamlined gateway for individuals new to cryptocurrency, allowing them to trade Bitcoin shares in traditional brokerage accounts without the complexities of direct asset ownership. The trust accessibility extends to tax-advantaged accounts, presenting potential tax benefits compared to conventional cryptocurrency investments. And GBTC boasts enhanced security measures, adhering to industry standards and mitigating risks associated with storing assets on vulnerable exchanges. Investors gain indirect exposure to Bitcoin spotting digital wallets, making it a convenient option for those navigating the intricacies of the crypto space. However, GBTC has faced scrutiny for trading at notable premiums or discounts to its NAV, impacting actual returns and leading to criticism. The trust's annual management fee of 1.5% is considered high, potentially eroding returns, especially in bear markets, making it less cost-effective than other options. Despite these concerns, GBTC serves as a bridge between traditional finance and the cryptocurrency market, providing liquidity, fractional ownership options, and tax-efficient cryptocurrency trading. Managed by Grayscale Investments and reputable firm, GBTC remains a popular choice for investors seeking exposure to Bitcoin within the regulated framework of traditional financial markets. The GBTC is poised to play a pivotal role in the evolving landscape of digital finance as it continues to facilitate mainstream adoption and integration of cryptocurrencies into traditional investment portfolios. And what they're working for, since, of course, the Gazzards told us, they were a lot more than the company is interested in investors, navigating the complexities of the regulatory framework. As the crypto landscape evolves, the GBTC remains a cornerstone for those embracing a crypto diversification strategy. Its role in providing investors with a seamless avenue for exposure to Bitcoin and a commitment to risk management and crypto underscores its significance in the ever-expanding realm of digital assets. In the face of a dynamic market, the GBTC remains a pivotal player, shaping the narrative of crypto investments and influencing the broader adoption of digital assets.